Tomorrow's NFP may decide the fate of the dollar going into next week. Here's what you need to know before tomorrow's NFP. Based on today's miss in advanced data processing on NFP, we may be looking at a miss in expectations tomorrow. Economists expected an additional 295,000 jobs, but saw less than half that amount this morning, which is highly concerning for the job market and economic growth. This may push the Fed to take a less aggressive monetary stance and focus on expansion. So, investors may start hunting risk-on pairs again. Glancing at the charts, the Kiwi dollar pair looks like a decent long opportunity based on a few metrics. The pair is coming back to test a double top with decent momentum to the upside on the 1 day. If price can break this resistance, a good target range could be in between the 50 and the 61.8 fib levels. The EdgeFinder also ranks this pair at a +3 buy rating. Gold also seems to be bullish at the start of the New York session. The miss in ADP numbers is helping the metal gain a foothold over the dollar as price climbs 1%. Gold's price is testing resistance around $1,860 and coming up to the 200 simple moving average on the 4-hour chart. The 1-day time frame suggests that a break in resistance could take gold up to test the 1890s. Equities slide for the 3rd day in a row in the anticipation of disappointing NFP data tomorrow as the XPX 500 comes down to touch the support levels just below 4100s. The next level of support lies about 100 points lower on the $4,000 level. On the 4-hour, price has crossed underneath a supportive trend line suggesting that the index will keep inching downward until that solid support at $4,000. On the 1 day, the index's most recent candle shows rejection from the highs of today and is forming an inverted hammer candle with selling pressure. Our VIP analysts are sharing their trades around NFP in the A1 Trading Discord community now. Join the community to get access to all their trade details, including their entries, exits, stop losses, and analysis of each trade. Take 30% off all memberships when you use the code A1YT at checkout. Check out the description below for more details. Our team here at A1 Trading has created a market scanning tool that helps us find our best trading setups. If you'd like to get live updates on institutional positioning, retail sentiment, and seasonality reports on the markets you trade, use the link in the description to get a copy today for a discounted price. Our tool is called the A1 Edge Finder, and using the promo code A1YT at checkout, you can get a copy for a major discount. Please feel free to reach out to our team if you have any questions about the tool.
Check this out. Gold. So I had buys above this area earlier. Looks like it's up about 91 pips from that area. It's pretty good. Gold moved very interesting today. I mean, look at these candles. That's from the news. So I'm going to show you gold on the hourly. I'm going to take all this away, and I'm just going to show you what I saw this morning and why I decided on that bias. So if we take away 7 o'clock, this was 6 o'clock. Okay, yeah. All right. So what I pretty much saw this morning, actually, I'm going to show you on the daily because the daily will be easier for me to show you. I'm going to show you what I saw. So the current daily candle looked something like, it looks something like this at the time that I came onto the charts, okay? Something like that. So I looked at this and I said, well, we got a lot of resistance going on here. We got these wicks. We got this resistance coming up. So I said, okay, if price wants to be bullish for the day, then I'm going to tag out this upmost resistance right here. I think we can get up to this area. And I made this a daily line. Okay. Now if we head down to the 4-hour, let's show you the next 4-hour candle. Let's see, 21. It's hard to show you when we're back testing because the charts are live. Let's see, it looked about here. All right, so it kind of looked like this at the time. And I said, all right, if we are going to get up to that daily candle, I need a little bit more detail here. Where are these resistances? So just by looking at the 4-hour, we can clearly see that there's one right here, right? We can tag this one out. And we can see that the one up here is kind of up here. That's cool. So now let's go down to the 1-hour. Let's get some more detail about this. It's 8 o'clock. Let's see, 7 o'clock. All right, it looked like this at the time again. So again, remember, the lower the time frame, the more detail you're going to get. So you're going to be seeing all these ups and downs. You're going to see all these wicks. But remember what you saw on a higher time frame. Remember how clean this looked, right? Remember what it looked like on the daily. It looks nice and clean, right? Okay, so just try to envision that. So when we go here on the 1 hour, I do see this resistance, but I did see that price was starting to break above it. So I said, all right, let's just take the next one, which would be right here. This would be the next one. And you just adjust your zones. That's all you really do. What I don't like is too many zones on the chart at once. So I just take 2. We'll go down to the 30-minute. And then this is when I really try to get my zones as exact as possible. Okay. So if I only want to have about 2 zones on my chart, on the 30-minute, I can clearly see that we have this going on. Okay. So now I'm going to look at this like, okay, maybe possible buys above this area, you know, and I'll set it like so. All right. Now, when we talk about sells, what do we see here? Well, when we're looking for clean ranges, we see below this gap, right? Below this low, we got a good range down to this area, right? So I'm going to tag out this area. Let's make that a major zone. And if we break below this area, then we can see a gap below this area, right? Okay, now again, looking for price to break these lows. So let's tag this out. Boom. So that's pretty much how I was looking at it this morning. Now, if we play this out, oh, I want to show you the news. I have to go to the 15 minutes. I think it was at 8:15, right? Here, yeah, 8:15. So remember, first news today was ADP farm employment. Now, if you do your back testing, what you should do is, what you can do is you can click on these little folders here and it tells you the history. It tells you the last time this news dropped. So it dropped May 4th, March 30th, March 2nd, February 2nd, January 5th. You can go back to those dates on your charts and just see, okay, what did that news do? You know, from my understanding, this news doesn't do too much. I mean, it did wake up about 30 pips, a little under that. Then it closed back into this range. Okay, so remember, once you tag out your zones for your possible buys and sells, it doesn't mean that you so much take an impulse entry. It depends on how the charts are set up, right? For me, just this impulsing up from news is not going to make me take an impulse entry. Okay, I'm just being honest with you. I need a little bit more than that. Okay, I'm going to need to see this close above this zone or something. We didn't close above the zone yet. So let's go to the next candle. Next candle, 8:30. Look at this. Now, this was down here for a long time. Okay, this did about 52 pips. It was down here for a long time. I'm going to tell you why. When we look at the 8:30 news, the unemployment claims, it was good. It was good news, right? Less people claimed unemployment. If less people claimed unemployment, that means more people got jobs, right? So if more people have jobs, that usually drives the price of gold down. So that is why you saw gold react this way. Now, remember, when it comes to news, sometimes the candles, they can react, you know, for the whole 15 minutes. Like, okay, gold's supposed to go down. Let me go down for 15 minutes. Then after that, sometimes the market picks right back up where it was, which is why you saw it continue to the top side, right? So it really depends on the news. Sometimes news affects charts for the whole day. Sometimes news affects charts for an hour. Sometimes it affects it for 15 minutes, as you see today. You know, so it really does depend on the news. All right. Now, if we continue, you're going to see that this candle pulled back up. Now, what does this look like on a bigger time frame? Let's go to the 30-minute. Notice how this closed bullish. Look at all these. Even throughout these wicks, they still closed bullish. Remember, we're bullish on the daily as well, right? On a higher time frame. So to me, that's a big hint that we're going to continue up, right? If we're bullish on the daily, we did all that extraness for the news, right? That's basically price testing these lows. It's still closed bullish after all that. We got to be going up. Okay, we got to be going up. So now I'll be looking more deeper into entries, correct? Okay. And you're going to see how price just immediately at 9 o'clock, it just sprung up. Sprung up. I'm going to show you on the 1 hour. There was no bottom wick, but something like this would be an impulse entry just because of, like I just said, the way that this candle formed. You just have to understand that it was a test from the news. It still closed bullish after that huge 50 pip wick, right? So that this would be an impulse entry, but this would be an experienced impulse entry, right? If you're a beginner, there's no way that I would expect you to even know that this would be an impulse entry. You know, if you're very experienced, then you've probably seen this a bunch of times, so you kind of already knew, like I said. So don't pat yourself, you know, don't get down on yourself if you missed it. It's a very advanced move. It's not easy. It's definitely not easy. But then again, let's just put this back live. Boom. You know, so we had graphed out for price, go to the hourly, to, oh no, we're on the 15, right? To go to this zone next. But if we go on the hourly, what were our next zones on the hourly? Our next zones were here, right? The next zone is here. Where's your next zone? Up here. You know, so I like to take things zone by zone. You know, as price moves, I switch out my zones. But as you can see, if, as long as you take it zone by zone, you would have been okay. You would have kept up with this. So once again, this is up what? 120, now it's up 122 pips from where we entered, but currently what, 87 pips?